Investors start believing that the source of alpha is rebalancing activity or the action what you do with the portfolio.
That people think that managers should be able to tell when the peak is there, sell everything at peak, go into cash, then there is a bottom, and then take the cash and buy everything. A lot of people think that when there is an event or market downturn, then rebalance has to work. Seen the billionaires, they make over decades, and initial 10-20 years, the amount is very, very small. We have seen the billionaire.
Hi, welcome to this episode of Omni Talk. Today we are talking about a very important and very popular aspect of investment management, which is the rebalancing. Right? I personally believe that it is given, insignificant, or rather significantly much more focus, which so essentially many investors start believing that the source of alpha is rebalancing activity or the action what you do with the portfolio, right? So because let's try and make investors understand that what is the value add of a rebalancing activity, which kind of strategy it is important, less important, and so on.
Yeah, so again, we need to focus on the style of investment of the manager and fundamental style of managing portfolios do not require frequent rebalancing.
No.
Because fundamentals change very slowly, right?
Yeah.
Sometimes there is some news that some law has been passed and this is now, maybe 30% of revenue is at risk. Then of course that's a sudden thing for that company or sector, right? Or that industry. So but your whole portfolio is not in one industry typically, right? Even thematics are usually broader based, at least from our house. So fundamentals don't change. So all fundamental styles should typically have a slower rebalancing, number one. Non-fundamental styles based on price, etc., and lot of trading strategies, they require frequent rebalance. So as soon as you are talking to Omniscience Capital or you're looking at Omniscience Capital related strategies, it doesn't make sense to look at frequent rebalances. Second is that a lot of people think that when there is an event or market downturn, then rebalance has to work. Correct. Again, that applies to the price focused managers or strategies. To fundamental focus, which ours is highly sophisticated scientific investing framework. So where fundamentals change slowly, yes, prices do change and sometimes a stock could become overvalued, at which point we would like to remove it. Right. But even that happens over a long term, because when we have identified it, it is at a significant discount to the intrinsic value, and which means rest of the market, Mr. Market we call them, doesn't like it. Yeah. So the chances that it's become overvalued suddenly is usually low. Typically the stock becomes overvalued. The typical holding period for our stocks would be anywhere between 6 months to 18 months for a lot of stocks, and for some stocks it's 3 years, 5 years, or even 7 years, right? So they might stay in the portfolio for a fairly long time. Now this is not surprising to us because we are trying to ride on various growth vectors which last for a decade plus. So as long as the growth in the fundamentals and that opportunity, the TAM is significantly large and stock is still at fair value or discount to intrinsic value, it makes sense to continue with the stock. But because we have a highly focused portfolio of 20 to 30 stocks, there are more than 1,000 companies investable in the market as a universe, out of which you might always, every quarter when financials are out, you look at your own portfolio, you look at the valuations, you see whether market price is still lower than the valuation, and then you also see outside your portfolio, out of the all, let's say 1,000 crore plus companies, and you see if there are some good opportunities. If there are, we would like to bring them in the portfolio. That creates a rebalance.
So let's also discuss few of the typical questions that we keep getting on the rebalancing, right? One is, most of the time when there is a downturn and when the prices are falling or portfolios are losing value,
yes,
everyone is strongly reminded of the rebalancing concept.
Exactly.
That do something, put a support or do some activity so that it doesn't fall or it starts recovering.
Right.
So why? And I understand this. There's human, behavioral bias or something. But let's talk about it and let's try and address that.
Yeah. So, see, first thing is, what are you supposed to get from the manager? People think that manager is magician. No. So manager is not magician. Manager, you are hiring because someone is going to go through all those 1,000 companies which are theoretically 1,000 crore plus market cap companies which you could invest in. Now what is investable right now? So that is the research we are doing and trying to find out from that 20-30 stocks, and if there are growth factors, maybe 7 to 15 or 20 stocks which are investable in that growth factor or in the whole market, right? That is what you are trying to do, and that is the focus. And then you have to monitor them, whether anything is wrong, whether anything fundamentally has changed, right? Sometimes some regulation could change, something else could happen, which is due to which the company's fundamentals for the future could be deteriorated. So that's the first most important downside thing you have to take out. Second is overvaluation. And third, you are trying to see if there is something outside the portfolio which is investable. So these are the three things which you are paying the fund manager for. What if people promise you also, I don't think happens, is that people think that managers should be able to tell when the peak is there, sell everything at peak, go into cash, then there is a bottom, and then take the cash and buy everything at bottom. So this is great thing if everyone would love to have that, but we don't think that is possible. We have not seen, if you do that, you would start with practically zero capital, and within 2 years or even 1 year you should become a millionaire or billionaire also. So that doesn't happen. Or maybe over 5-year period, let's say. Right. You should have extremely large number, because if you knew that this is peak, you will sell everything. Right. At the bottom you will borrow as much as possible, and then you are where you would be. But that's not what we have seen. We have seen the billionaires, they make over decades, and initial 10-20 years the amount is very, very small, and then it compounds because larger amounts in absolute value seem to grow very fast. Right?
Yeah, so psychologically, like when the portfolio is doing good, the stocks are going up, nobody cares. We think that don't touch, don't disturb.
Yes. Why did you sell this? It went up after
went up again,
yeah,
right?
Yeah.
So people hate rebalances at that time,
right.
But obviously when it starts falling, then it seems that you can do something about the falling portfolio and fix that. But that is not that cannot be done in that way. You have to keep your focus on fundamentals and valuations, as Vikas just talked about. One more question that typically on the allocation front itself comes is that, okay, you tell me when is the next rebalance? Should I invest now? Should I wait? Or so that if I want to make top up, or should I exit now and then bring the capital after the rebalance? These are the other questions that typically come.
No. So that's our job. Just like in any other portfolio strategies, the structure, right, as a mutual fund, AIF, PMS, or here you have some, you have your own basket of stocks. It's always going to change. Eventually, you have to rearrange it, realign it, rebalance it over a period of time. So that should not come in as a factor for our strategies. Okay, for our strategies, whether you are investing today and tomorrow there is a rebalance, I don't think it makes a big difference over a 5-year period. Okay, rather things could change in the 2-3 days. So you invest when you want to invest. Rebalances will happen.
Okay. And I think the brokerages, the other expenses are anyway quite
very small. Brokerages are very small. Then the other thing people say is taxes. But we are talking taxes you have to pay from your profits. The idea is to generate a profit
then
and grow the capital over a long period of time. So it's not very important to think about these things, in our opinion. It's a factor, but it's not relevant too much.
Great. So that's the idea to talk about feature of investment management, which is rebalancing. And you should know what kind of strategy you are investing in, whether it is trading oriented, where probably rebalances become more important, but whether it is investment oriented, long term, fundamental oriented, then your focus should be more on the investment strategy, the portfolio valuations and the fundamentals of the companies that you are investing
Yeah,
in.
so I'll just like to point
Sure.
out, sorry to interrupt you, but people still might have a confusion, so I want to clarify. So you're waiting for a rebalance, and let's say it's going to happen 10 days from now. In 10 days, you don't know where the market is.
True.
Okay, and whatever you're going to save in the short term taxes, you might lose in terms of the gains.
Yes, right.
Okay, so I don't think that makes sense at all. I think when you're investing, you invest, let the accountant take care of the taxes. It's part of your it's being taken from your profits. If you have no profits, there is no taxes, right? So always keep that in mind, that your money is net of taxes. That's it.
Right.
Okay, if that is good enough,
Yeah.
then that's all you have to worry about.
Great. So I hope it made sense, and thanks a lot for tuning in.
Thank you.